You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 18th day of April, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. First live broadcast is our live training room, and that is reserved for members only and those who are taking their 1-week free trial. If you've not taken your 1-week free trial, you can do so by going to mytradingiq.com, and at the top of the page there's a button that says free trial. You get 5 consecutive days at our live training room, get to use our platform, our indicators, one-on-one mentoring, get to chat with our traders who've been with us for quite a while, around the clock support, and there's no credit card required. We foot the bill. We put our time, energy, and resources into you, a perfect stranger. Although no one's perfect, but we want to give you an opportunity to learn whether or not you have what it takes to become a trader without having to invest a dime. At the end of the 5-day free trial, then you will be given an opportunity to make a decision as to whether or not trading is right for you, and if you want to become a lifetime member, no recurring fees, no upsells, and no nonsense. Now, the live training room ends at 11:30 a.m. Eastern. We take a 30-minute break and come back for the afternoon broadcast at 12 noon Eastern. Now, this broadcast, the one you're listening to now, is open to the public. That's everybody everywhere on planet Earth with an internet-connected device. 2 ways to join this afternoon broadcast. One, you can go to mytradingiq.com, scroll down to where it says Afternoon Broadcast, click the link, complete the 30-second registration form, and you're done. Every trading day going forward, you'll get an email about an hour before the broadcast starts. So at 12 noon Eastern, all you have to do is click the link in that email, and it will automatically log you into our platform where you have access to the question box and have the ability to participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join the broadcast live. I have good news. Point your browser to our YouTube channel. It's easy to remember. You already got the youtube.com part down, /CFRN. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. If you're new to the world of CFRN, it's also a great way to get to know who we really are. Because anybody can say anything today. But what were they saying 6 weeks ago, 6 months ago, a year ago, 2 years ago, even more? You can find out by simply going to youtube.com/CFRN and just scroll back in time. Pick some days at random. And whatever day you happen to pick at random, just fast forward to the part where we're doing the recap. Now, we recently switched our format. First, Michael would come on and do a recap of the live training room, and then I would do a recap of the alerts, but we've switched that up. I do a recap first, and then he comes 45 minutes into this broadcast, does a recap of the live training room, and then we spend 30 minutes trading live on the TradingView platform. Now, when you take the free trial, you get 2 hours a day of live trading on the TradingView platform. So each day we give you a little taste, 30 minutes. Now, it's at a time of day, 1 p.m. Eastern, where the markets sometimes are a little bit flat. In fact, during yesterday's 30-minute session, we didn't have any trades set up at all. Ask yourself a question. Can you sit still in front of your charts for 30 minutes without touching the mouse? You see, unless you're willing to wait for a high probability, low risk trade setup, no matter how long that takes, you're just gambling. The beauty of our methodology, strategy, and indicators is that they're fluid across all markets and all time frames. That's futures, that's stocks, that's crypto, that's Forex. There's always a trade setting up somewhere. So in the beginning, focus on 1 or 2 markets, learn the methodology, learn the strategy, learn to read the indicators. Now you're set free. You're no longer dependent upon anyone to tell you when to get in and when to get out, because you have gained the ability to read the chart like a newspaper or a good mystery novel. We always open with a word of prayer, which is what we're going to do right now. Then we're going to go into the topic of the day before I do the recap. And for those of you listening via our YouTube channel, you already know today's topic. Why are futures better than stocks and options? Again, you can use our indicators and strategy to trade anything, but futures have benefits that stocks and options just don't even come close to. So stick around for a few minutes and we'll talk about that. Over the last week, we've been talking about trading our doubts for brave faith. It's easy to doubt. It can be difficult to believe. It takes faith, brave faith. And we've been kind of picking on doubting Thomas. Today's scripture, John 14, verses 1 through 6, and I'm reading from the Message translation. Don't let this rattle you. You trust God, don't you? Trust me. This is Jesus speaking. There is plenty of room for you in my Father's home. If that weren't so, would I have told you that I'm on my way to get a room ready for you? And if I'm on my way to get your room ready, I'll come back and get you so you can live where I live. And you already know the road I'm taking. Thomas said, "Master, we have no idea where you're going. How do you expect us to know the road?" Jesus said, "I am the road, also the truth, also the life. No one gets to the Father apart from me. If you really knew me, you would know my Father as well. From now on, you do know him. You've even seen him." Again, that was John 14, verses 1 through 5. Thomas and the apostles had learned the value of presence and proximity. They continued to stay close to Jesus in the final days of his life on earth. During his last meal with them, Jesus poured out his heart and told them to love one another the way he loved them. He told them he would soon be leaving, assuring them that they knew the way to the place he was going. Clouded by confusion and uncertainty, they were unable to accurately process all that he shared. None of them knew the way, yet only Thomas became brave enough to speak up. He asked two crucial questions we still need the answers to today. As we read in John, Thomas said to him, "Lord, we don't know where you're going, so how can we know the way?" Jesus answered, "I am the way, and the truth, and the life. No one comes to the Father except through me." Because Thomas pressed Jesus for more information, they all received greater revelation. Heaven is a personalized, customized place for every single person who believes in Jesus' death and resurrection and who puts their faith in him. There's no fear, no sickness, no pain, and no tears. It is a place of love, joy, and peace, filled with the presence of God and his people. We were created for perfection, but we won't have it this side of eternity. Heaven is the full restoration of all that became ruined by the fall. When we accept Jesus Christ as our Lord and Savior, we don't need to fear death and the unknown. Jesus wanted his last conversation with his apostles to point them towards heaven. The answer Jesus gave to Thomas is the critical answer he gives to us. I am the way and the truth and the life. No one comes to the Father except through me. That is the ultimate invitation to come closer, no matter what tries to drive us away. Here's a question. Is there any wonder that Jesus wanted his last conversation with his apostles to point them to heaven? How strong is your desire to go to heaven? Pray with me. Jesus, thank you that one day all that is broken will be restored. Thank you that we don't have to fear death for the unknown because we know you as our personal Savior. It's in your name that we believe and pray. And everybody said, Amen. Now, let me give you the numbers from around the world. Start with the cash markets, or the indices as they're called here in the U.S. Just kind of give you an idea of where we stand around the world. The Dow's currently down 27 points. The NASDAQ is down 5. S&P 500 basically unchanged. And our man in the street, the Russell 2000, down 11.5 points. No movers, no shakers. Something's cooking. This thing is getting ready to bust loose. Up or down, I don't know. I'll just be honest with you. But there's a coiling, there's a tightening, and something big is on the horizon. Just be ready and be nimble for whatever it turns out to be. Okay? Just don't let it catch you by surprise. I wrote about that last night in the discussion group. Currently, crude oil is up 44 cents, trading 81.27 a last. Gold up $14.10, trading 20.20 last. Silver up 22 cents, trading 25.31 last. That's almost 1% for silver. In the Asian markets at the close, Nikkei posted a gain of 144 points. Shanghai rose 7. The Hang Seng dropped to 131. And in the European markets at the close, FTSE up 29 points. The DAX up 93 points. The CAC up 35. Not a mover or shaker around the globe. Was a mixed day in Asia. It was a green day for the UK, but a thin day. And here in the US, it is a red Radio Tuesday. Not deeply in the red. In fact, the S&P hanging around that unchanged. It's gone red, but not a full point. So I just want you to keep in mind just how thin, how quiet. The markets are anticipating something. Okay? What that thing is, I don't know. But I have a feeling we'll find out in the coming days. Now, the topic of today's broadcast: the benefits of trading futures over stocks and options. In today's dynamic and volatile financial markets, investors are often looking for ways to maximize their returns while minimizing risk. While stocks and options have traditionally been the go-to investment vehicle for most investors, futures trading is gaining in popularity due to its numerous benefits over these other methods. Futures trading is a type of derivative investment or instrument that involves making a contractual agreement to buy or sell an asset at a predetermined price and time in the future. The underlying assets can be commodities, currencies, or financial instruments such as stock indexes or interest rates. Now, the most popular futures market is the S&P 500 Emini. And with the indices, you never have to worry about taking physical delivery. Nobody's ever going to back a truck up into your driveway loaded down with a couple of hundred S&P E-mini contracts. That's just not how it works. Now, Can that happen with gold or crude or cotton? Yeah, but not E-mini futures. It's an important thing to remember. Now, we talked about the supply-demand issue, comparing commodities that have a finite amount. Now, soybeans, we didn't talk about that, okay? When November beans come out, right, there will be a fixed supply. But there will be more beans. They'll plant more beans. But we have some things like crude, gold, silver. Those are finite. God created them, sewed them up in the belly of the earth, and rested on the seventh day. There will never be more crude, gold, silver, platinum, or palladium, and other things than there is now. One of the key advantages of futures trading is that it offers greater leverage than stocks or options. With futures, traders can control a large amount of an asset with a relatively small initial investment. Let me put that in context. During the day session, you can buy one S&P 500 E-mini contract for about $600 with most brokers. What does that represent? Almost $250,000 in best of breed S&P 500 equity. This allows investors to amplify their potential profits, although it also increases the risk of losses if the market moves against you. And that is why, for 2 hours every day, you're taught not only our strategy and how to read our indicators and how to read the chart, but you're taught aggressive risk management. If you're a new trader, your question should not be, how much can I make? The question should be, how much can I not lose while I learn how to do this thing? Another significant advantage of futures trading is the ability to trade around the clock. Got a day job? Not a problem. Futures trade from Sunday night at 6 p.m. Eastern, round the clock until Friday afternoon at 5 p.m. Eastern. Unlike stocks, which are only traded during market hours, 9:30 a.m., 4 p.m. Eastern, futures can be bought and sold 24 hours a day, 5.5 days a week. And I say a half because we open Sunday night at 6 p.m. Eastern. This provides traders with more opportunities to capitalize on market movements and respond to breaking news or events that can impact the markets. Futures trading also offers greater liquidity than stocks or options. Since futures contracts are standardized and traded on regulated exchanges, there's a large pool of buyers and sellers. This makes it easier for traders to enter and exit positions quickly and at fair prices, without the need for negotiating or finding a willing counterparty. There's no market maker. I mean, with stocks, you could buy a stock and it can have a great run. You've racked up some ducats. But now, in order to reap your profit, you got to find somebody that's willing to pay that now much higher price. You don't have that problem in the futures market. During the day session, the spread, there isn't one. I mean, they're right up against each other, the bid and the ask. even on the overnight session. Crude, S&P 500, gold. Rarely will you find a spread. In any futures market where you do find a spread on the overnight session, it's not much. Futures allow for greater price transparency and more accurate price discovery. Because futures are traded on exchanges with central clearing, prices are determined by the forces of supply and demand in the market rather than by individual transactions negotiated between buyers and sellers. This makes it easier for traders to get an accurate and real-time view of market sentiment and make informed trading decisions. Another advantage of futures trading is that it allows traders to hedge against price fluctuations in other investments. For example, if an investor owns a portfolio of stocks, they could buy futures contracts on a stock index as a way to offset potential losses if the market declines. This can provide a level of insurance and reduce overall portfolio risk. Finally, futures trading offers tax advantages over other investment vehicles. Now, let me say this. You need to get tax advice from a licensed tax professional. I'm the last guy in the world you want to get tax advice from, but I'm just telling you the truth. In the United States, futures contracts are subject to a lower tax rate than stocks or options. This can result in significant tax savings for investors and traders, especially those who engage in frequent trading. Now, if you're a stock day trader, number one, you got to maintain a $25,000 account balance. But at the end of the year, everything you bought and sold and bought again and sold again, it's all got to be reconciled. It is a bookkeeping nightmare. With futures, you get an envelope in January with one number on it. How much you profited over the past year or how much you lost over the prior year. Your accountant is going to love you, but you'll probably have to educate your accountant on the tax benefits of futures. Okay? Now, they're not just going to believe you. You just tell them, let them do their research, and they're going to come back to you and go, whoa, I had no idea. This has got to be the best kept secret in the world. And it may be. I don't know. Bottom line, talk to your accountant. Now, to wrap this up, while stocks and options have long been the primary investment vehicles for most investors, futures trading offers a number of compelling benefits that make it an attractive option for those looking to maximize their returns while minimizing their risk. From greater leverage and liquidity to 24/7 trading and tax advantages, futures trading is a powerful tool that investors should consider adding to their investment and trading arsenal. However, as with any investment, it's important to do your research, understand the risks involved, and have a solid trading plan in place before getting started. And that's one of the first things that we help our new lifetime members with. Our 24/20 blueprint walks you through the process of creating both a business plan and a trading plan. Two very different things, and 9 out of 10 traders don't even know they need either one of them. Also, 9 out of 10 traders don't have access to a teacher. Oh, I got a shelf full of books. I've watched a million YouTube videos. Nothing wrong with that. But have those things made you a consistent trader? I'm going to guess in most cases the answer is no, or probably not. There's no replacement for a living, breathing teacher, putting on, taking off trades live in real time, explaining every move they make, every trade they take, and the rule behind it, while you ask questions as you're learning the methodology, the strategy, how to read the indicators, and even how to read charts. So now you know why we can trade anything with our strategy and indicators, because price flows the same across all markets and time frames. But now you understand a little better why since 2005 we have focused primarily on futures. Let's take a look at logic 247. That's our 24/7 around the clock E-mini alert service. It's not just the E-minis though. It's also crude and gold and silver and euro and the bonds. We're in week 246. Over those 246 weeks, we've issued over 13,800 individual handcrafted alerts. Since the markets opened Sunday night at 6 p.m. Eastern, as of 7 a.m. this morning, okay, now things have changed since this recap was posted, but Valerie will update it this afternoon and again this evening. But as of 7 a.m., we had issued a total of 26 alerts. 3 never triggered. We were still waiting on 3 at the time. That gave us 20 actionable alerts, of which 2, or 10%, would have been stopped out based on not risking more than $300 per contract per trade based on market structure and a simple 3-step process that we teach all of our traders in their one-on-one mentoring sessions. Cardinal rule is you never risk more than the potential profit in a trade. And even if an alert has a potential profit of $1,000 or $2,000, if your plan is to jump out with your 2 points, goal for the day, then you really shouldn't risk more than what you plan to take out of the trade. It's bad math, bad science. You can get away with it for a while. Eventually, it'll come back and eat you alive. So just don't do it, okay? Over the last 246 weeks, we've averaged 20% or less of the alerts being stopped out based on that risk profile I just explained. And currently this week, we're sitting at 10%. Yesterday, we were at 0. Now, the logic alerts are based on current price action, but our original alert service, the concierge trade alerts, they are based on historic price action. And when historic price action meets current price action, that's where you'll find some of your best high probability, low risk trade opportunities. The CTAs are published as a static report, whereas the logic alerts can come out at 2 a.m. or 2 p.m. whenever opportunity presents. CTAs come out shortly after the Globex open. Sunday night, I did good, 10 minutes after the open. Last night, I had to run an errand, so it took me an hour. Market opened at 6 p.m. Eastern. The report was published at 7 p.m. Eastern. Now, since this broadcast is open to the public, anyone who would like to grab a screenshot that's not a member or on the trial, because if you're a member or on the trial, you had these numbers last night. For those who are just lurking, grab a screenshot. Now, what do you do with the numbers? All right, once this report comes out, we'll use the ES as an example. Go to your 30-minute chart and make note of where price is at this time. It's always going to be between these two numbers. Once you've done that, draw a line in the sand at the long target, line in the sand at the short target. Those serve as great visual cues to keep you on the right side of the street. You don't want to be selling a rally and buying a dip, which is what many people end up doing, okay? This will help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's that simple. Now, the logic alerts and the CTAs, it's not an either-or proposition. The two work hand in hand. You'll see how that unfolds over time. Price gets below the 30-minute BBC, it's trying to get to the short target. It's really just that simple. You still have to look left to spot potential obstacles, previous swing highs or swing lows that can serve as support or resistance on the way to the target. Okay? Over time, you'll learn how price behaves around a weekly trading zone. We've published the zone since December 14th of 2009. So we've got well over a decade of data that tells us exactly how price behaves around a weekly zone. Only three things can happen. 70% of the time, it's consolidation. 20% of the time, rejection. 10% of the time, the slice. Now, you have to resist the urge to make it more complicated than this. We've worked really hard for many years to make it as simple as it seems. Yet inevitably, someone comes along and takes what we've worked so hard to make so simple, and they start to complicate it by bringing in other thoughts, ideas, or indicators, or oscillators. That's a Barney Fife. Those of you that aren't old enough to remember Barney, he used to shoot himself in the foot a lot. Don't do that, okay? If it turns out that what we have is not right for you, you can still go back to losing money the way you've done over the years, okay? You have to approach this with a mind that's like a clean slate. I'm going to forget everything anybody ever told me about the markets. I'm just going to listen to these guys. I'm going to do what they tell me for my 5 days free trial. It's 5 consecutive trading days. You can sign up any day, even on a weekend. You'll still get 5 consecutive days. If you'll do that, you'll have an experience that changes the way you see the markets forever. All right, Michael's going to be here to do the recap in just a few minutes. So we'll cover as many markets as we can, as quickly as we can, which will probably amount to the daily chart. But then when we're done trading live on TradingView, I will stick around and finish the recap of the CTAs. Now, this question's getting a little long in the tooth. But look at where price is. I went into detail yesterday about the fact that blue and climbing is now directly above price. It's acting as resistance. 1, 2, 3, 4, 5 trading days in a row. Consolidation. Coiling, as Leslie used to call it. Okay? This thing is about to bust a move to the upside or the downside. I can't tell you which because I don't have crystal balls. But just be prepared for the move when it happens. When the market is flowing in, you can make a year's wages in a week, couple weeks, sometimes a couple days. So when the market makes that huge impulsive move, be prepared. With our strategy, we like to see the impulsive move, then the retracement, and then we like to trade that second leg of the move back up to the previous swing high or swing low. But I'm getting buried in details here, so let's just move on. Green line's the BBC. If you don't know what that is, listen to yesterday's video. I went into detail almost every day I do. The other indicator, red and falling, blue and climbing. One bearish, the other bullish. And again, they all work hand in hand in concert. Truly amazing. Hold on for me 1 second. All right, I apologize. My accountant, it's the worst time in the world. Anyway, see all these wicks, dojis. Something's cooking. We'll find out. Just take a little time. All right, this is the 30-minute chart of the S&P 500 E-mini futures. We're just looking at the daily chart. We've been in a downtrend now over a year. Well over at this point. The vertical line separates today, Tuesday, from Monday. Back here is Friday. This was the opening candle last night. 6 a.m. to 6:30. 6:30 to 7. It was during this little tiny candle that you can't even hardly see. It was right at 7 p.m. Eastern when I issued the alerts. Okay? So, the pullback to the BBC holds more often than it doesn't. What a beautiful example. Okay? Pullback held, right? 2 30-minute candles back to back. We get above red and falling, which is potential resistance. And then we just ride the step line right up to the target. An entry on this candle, 41.77, took you to 41.87. That's 10 points, $50 a point, $500 per contract traded. If you've earned the right to trade 5 contracts, that's $2,500. 10 contracts, it's $5,000. But you start out in sim until you learn the strategy, until you put together 10 consecutive days in a row. Hang on, Michael's sending me a message. The bat phone. Yeah, you're right. Okay, so the yes. We hit the long target. Now notice the step line here. We overshot the zone by a little bit. The zone's 4191/92. We overshot it a little bit, but notice here where the step line crossed blue and climbing. That tells us we're in for a pullback. The pullback holds more often than it doesn't, like here, and here, and here, and here, and here, and here. But we know eventually it won't hold. That keeps markets fluid and tradable. And so when this candle closed below the BBC and we opened below the BBC, look what happened. Price dropped like a rock. Where to? The weekly zone. When price rallies up to a zone, we expect resistance. When price drops to a zone, we expect support, support, support. Now we've pulled back to the BBC, the pullback held. What do we expect? Another drop, most likely to the zone at 4166/67. When you're above the BBC and you have the step line and blue and climbing tracking each other like this, separation in between them, ride that wave. Okay, that's the thing you're waiting for. First you wait for the pullback, and then you wait for this. Bang. Now we've bounced off of the zone a couple times, pulled up to the BBC. What's going to happen next? Well, I said we most likely drop back to the zone, but we've got to get below red and falling. We've got to get below the step line. So something like 4172 down to 4169. That's a nice 3-point trade. Is that you, Michael?
That is me.
Okay.
I am here.
All right, guys, we're going to hit the pause button on this recap. Michael's going to do a recap of what happened in the live training room this morning. And then I'll pop back on at the end of the live trading on TradingView, and I will finish the recap of the CTAs. We'll walk through each and every individual market just like we did on the S&P. Take it away.
All right, here we go. Should be looking over here. Yes, you are. Okay,
Yep,
great.
looks good.
All right. Good afternoon, everyone. Today is Tuesday still, right? Yes, today is Tuesday, the 18th day of April, 2023. So if you have not taken a free trial with us, go here to mytradingiq.com. Right here is a sign up for your free 5-day training now, 9:30 to 11:30. Click on that and be sent all the information you need to get into the room in the morning. Now, when you do take the trial with us, you should definitely come over here and download the trading platform. Click on trading platforms, go in here and download whichever one you want. I would recommend you don't have to download TradingView, you just sign up for TradingView. Even if you get the read-only version, just sign up for TradingView and you can watch what we're doing, okay? You'll be able to you'll be able to have a copy of what I'm showing you right over here. You'll be able to have a copy of this. It's actually available right here from the website. If you go to Trader Rules and you click on this link right here, it's going to bring up a copy of that. Even if you don't sign up for TradingView, it'll still bring up a copy of that. So you should do that. All right, download the trading platform, sign up for the trading platform, do all that stuff. Once you've done that, we'll send you all the information you need, tell you how to set up everything. It's all here on video, but we'll help you with that as well. If you spend more than 5 minutes setting it up, set up a meeting with us, because it'll take me 5 minutes to set it up for you. So you don't really need to kill yourself trying to get stuff set up, all right? The spreadsheet. Today, we had an okay day today. Started off great, and then I did a lot of training today, so I ended up talking a lot too. I didn't have a ton of trades, only 10 trades. But if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Let me check and see who all is in here today. Yeah, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we made 79 ticks in the NQ. We just had a couple of trades on the NQ. 2 trades on the NQ. I think we had 11 trades in me. update that when I get over there. We lost 4 ticks in crude. We made 24 ticks in gold, and we were break even on the ES. Today it took 2 minutes and 1 trade to get to $520, and we took a total. This is 11 trades this morning. So on the month, we were at $5,272. That's over 11 trading days, averaging $479 per contract per 2-hour trading day. On the year, we've gotten our goal on 72 out of 73 days, and we've only gone 1 day since our last non-green day. Yesterday was a blue day, and we've gotten our goal for the day on 420. I mean, we've not had a red day in 420 business days. I think it's actually more than that, but we'll go with 420. On the year now, we're at $37,425. That's over 73 business days, averaging $512 per contract per 2-hour business day. If you were to quit trading when you get your goal for the day and you would add 1 contract per month, then you'd be up to 4 contracts right now. And for us to go to 5 contracts next month, this number has to be over $8,000. Okay, it's got to have a minimum of $8,000. So that means I get my goal every day, beating the minimum to get my goal every day. If we have 20 business days in a month, I think right now we're 11 days in, and we have 5, 6, 7, 8 business days left this month. So we should easily get that in 8 business days. Okay, that's it. All right, so if you were to quit trading when you get your goal for the day, you would only have to work 17.38 hours, and you would have averaged $1,372 per hour. That's not to say that you would make $1,372 every hour that you sit down, but so far this month, we've worked about a little over 2 hours, 2.5 hours almost. And in 2.5 hours with 4 contracts, we've earned $23,857. Is that right? No. With 4 contracts this month, we've earned, in 2.5 hours, we've earned $6,830. I knew that number sounded really big. $6,830 in 2.5 hours so far this month with 4 contracts. That's where we stand. That's with 1 contract on the year so far. Not with 1 contract. That's bumping up. Whatever. You know what I mean? Maybe you don't. I don't know. Anyway, let's get into the actual trades. All right, on gold. Now, gold started out really well. Gold, it was looking like it was going to be really volatile today. Oops, I moved that over. Didn't need to. It was looking like it was going to be really volatile today. And it didn't disappoint. It had some good movement. Looking at the larger time frames is what I was thinking when I thought that. Our very first trade here on golds, we're at our goal for the day. We picked up 12 ticks on that. Then the very next trade, we stopped out. This was a mistake. I shouldn't have done this trade. I was trying to show something and make an example, and I guess I made an example of what not to do. Because I took a trade where we didn't get an arrow where the black was in the green. That is a mistake. And I stopped out, so it punished me the way it should have. And I lost 10 ticks. The next trade I took was over here. We got those 10 ticks back. Got back up to 12. Then we stopped out again. I did this one right, but we stopped out on that one. Got back down to 2. Then here we picked it up again. Now we had a great trade on this one. We had we went from 2 to 34, so we had 32 ticks, I guess, on that one. That was a great trade right there. But then we stopped out on the very next one and went down to 24, and that was where we ended trading for gold. I think it was. It really didn't give a lot to go on in here, and I was doing a lot of training all through here. I think the guys liked the method of training that I did today. I think the bar by bar stuff, it doesn't really coincide with the lesson plan, but I think the bar by bar stuff people tend to like a little better. Yeah, the bat phone was ringing. Definitely was. Dwayne's bat phone. All right. That was gold today. On crude, we only had a couple of trades on crude. We had one here where we had +6, and that was a great looking trade. We actually saw 80.30 here. This line was up here at 80.30. That was the number that I was looking at when I took this trade, and we took 6 ticks profit on that. It hit 80.30, then it pulled back, and we could see this number. It went down there. I missed that trade, and then we saw this number down here, and it went all the way down there. But I only took that one for +6, and then I believe we were doing training after that all the way through to here. I started this one right here, and it stopped me out pretty much to the tick. But while it was doing it, we could see all these things happening in here. And then at the end of the session, I got it all back right here at the end of the session, but I didn't count this toward the total. But we stopped out on this one here pretty much to the tick, and then it ran up and did everything that we thought it was going to do right here, stopping us out. And then it went really sideways during the break. So we ended up with -4 ticks on crude. On the ES, we had just the one trade, break even right there. That was our only trade on the ES. And that one, I actually took it, I got short, and then when I went to break even, I accidentally only put 3 on a break even, so it took me out at 3, and then it took a little while for it to get back over here, so I get that final one off at break even. But I eventually did, and then that was it. That was the only trade we did on the ES. Okay, see how flat it's been in here? And all the indices were flat like this. I don't know what's going to happen when we start up the live trading here in 3 minutes. I'm hoping we're going to get a little more action than this, but who knows? Yesterday, we didn't get a single trade in that half-hour period. And today, well, hope for the best, right? All right, so the NQ, we had just a couple of trades on the NQ also. And here they were. All right, there were some here at the beginning that I didn't get, some decent trades. One stop out right there. This would have been okay. This would have been the goal for the day. This would have been a stop out. This would have been plenty to get it all back. Change directions. You want to wait for a pullback here, which we did on that one. I got 6 ticks, 7 ticks on the first one. And then on this one, I got 72 ticks on this one. I'm pretty sure that's the way it worked out. There was another trade in here, but then I started the training, and look how flat everything got. There was no reason to trade anything all through here from 10 o'clock all the way to 10:30. It started to drop in here, and you could have taken some trades in here once it pulled back a little deeper. Remember, after the direction change, you want to wait for a deeper pullback, right? After the direction change, wait for the deeper pullback. We didn't trade any more, I don't think, on the NQ. We didn't trade any more at all on the NQ. As a matter of fact, for a little while there, I stopped even looking at the indices. I just had crude and gold up. During the break, it looks like there were a couple of trades in here during the break, but not much at all. All right, so it is now 12:59. I'm going to say, if you want to jump into the live stream, go here to mytradingiq.com, and down here at the bottom, let me hit refresh on this. Down here, that was what I had to go do, Dwayne. I had to go fix this, so it had us down here. Down here at the bottom, it is going to have a thing. If you look in, not here, but if you look in community live streams, and you go down to upcoming streams, right here is upcoming streams. Click on that. And that's where the live stream is going to start here in 1 minute. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, the homepage of mytradingiq.com, sign up for your free training right here. On the month so far, we are at, what was last month? This month, we're at $52.72 per contract so far, averaging $479 per contract per 2-hour business day. On the year, we're at $37,425, averaging $512 per contract per 2-hour business day. Okay. So I'm going to jump into the live stream now. You guys just hang tight, and it is now time to go over there. All right. Let me shut this off, turn this on. Here and here and share. There we go. Now hit start. All right. So I don't know what kind of action we're going to hear over the next half an hour, but we are in the live stream now. And if anybody has any questions, you can type them into the live chat, or if anybody in the GoToWebinar, you have any questions in there, you can type them into the question box over there. Okay. So now we're going to jump back into the live trading. And on the gold, it looks like we're going to get an opportunity to go short here. Let me see. I'm going to shut that off. And we have a high on this bar right now of 19.8. So if you subtract 8 from that, 19.0 is where you would be selling on that. Now, what we'd be anticipating here is that this is going to drop down out of the overbought area. Okay. We're coming off a lower swing. The long-term direction is bearish. The black line is either in the red or the silver. If we get a down close right there, that would indicate a shorting opportunity. All right. Okay, I just want to make sure it was still working. It's got a high now of 19.9, so subtract 8, it's going to put it here at 19.1. Right. The other markets are not doing anything right now. So we're just going to try to take this trade here on gold. Yesterday, when we did the live stream yesterday, we didn't have a single trade. This week, we had plenty of volatility this morning. We finished this morning plus 24 on gold, minus 4 on crude, plus 79 on the NQ, and break even on the ES. The gold, at the high of the day so far on the gold, we were at 34 ticks, and then we stopped out on the last trade that we did there. So the high of this bar is 19.9. If we get a down close and it pulls it out of the oversold here, you see the black is not going to be in the red anymore. So this has got to cross down out of the oversold, out of the overbought area. Right? It's got to cross down out of the overbought area to give us the trade. What we're looking for, again, long-term direction, these outer bands going down like that, that's bearish. The fact that this turned to white means that the short-term direction, this darker color right here on the inside, just changed to bullish. They're not both bearish, that's why it's not red. That's okay, that's fine that the short-term direction changes, it's no big deal. But we want to continue the trend. The markets, they always do, let me check that. They always do the same thing, right? They go down like this, then they pull back, then they go down like this, then they pull back, then they go down like this, and now it's pulled back. And so what do you anticipate? As long as it doesn't pull back above this level right here, we're still anticipating it's going to go down beyond that level right there. Okay, that's what we're anticipating right now. So the indicators are all in place to assist us with making this trade decision. We've got a high here of 19.9, so we're going to have a low 7 below that. 19.9 is going to be right here at 19.2. That means if the bar doesn't go any higher, which it just did, then it would close down there, but it went one tick higher. So now it's going to close right here at 19.3, and now it's no trade. Okay, why is it no trade? Well, because when this bar closes, the black line right here is going to be in the green. That was the mistake I made earlier today with gold. Okay. There's a chance it won't be, but I'm pretty sure it will be. And remember what I just drew for you a minute ago. When I said it goes down and it goes up, it goes down and it goes up and it goes down. We expect it to go down below there, but we don't want it to go up above there. It just went up above there. Okay. So there's a chance we're going to get nothing right now. A good chance we're going to get nothing right now. So if I go back to this, right, crude oil starting to move, so we could get something here on crude. These levels that I drew in here were levels from earlier today. I can remove those. Okay, and if the black line here gets into the green, we're not going to get any short arrows at all. We won't even get any more red arrows, little ones. Okay. So we've got a high of 20.4, subtract 8 from that. I'm not going to put the sell stop order on right now because I'm not sure that we're going to get an arrow. So I'm going to wait for the actual down close and see. But it's pulled back just a little bit too deep, so we probably shouldn't do that at this point. Okay. We'll see. None of the markets have given us a trade yet. The crude just made that move down. Now let's look at crude a little bit bigger picture here. Is this just a pullback of this here, an extension of the chop? That's what it's looking like to me. Let's look at it on, well, I'm going to look at it on Another thing here, let me slide that off to the side and look at crude oil on there. Crude on the 30-minute chart is what I'm looking at right there. Okay, it is exactly at a point that I had talked about earlier today. I had even drawn a purple line on it earlier today. It's exactly at that point right now, and we'll just have to wait and see if it's going to do anything. It's in an area right now that I had highlighted before, where it's right below a woo spot. Those of you guys who don't know what a woo spot is, it's a window of opportunity. And it's right below a big woo spot, but it's got to go up above and close up above like 81.50 to really get into it. If we look this on the 30-minute chart, we may be able to see. See right here, 41.50. If it closes up above here, this is where the woo spot begins, and the woo spot goes all the way up here to 82. So you can see it's bouncing off of, well, this is the long-term duration right here, but it's bouncing off of that. It's also bouncing off of something else right here. Just have to wait and see. Right? I do not want to short this at this point. It's still just an extension of the chop. Okay. I'm still waiting on the gold to see how that's all going to come together. It could give us an arrow on the down close. I don't think it's going to, but it's possible that it will. All right. All right, anybody that's in the live stream right now, if you have any questions, you want to see anything else, just type it in. You want to see a stock symbol or an ETF or anything, just type it in. We're now 8 minutes into this session, so we have 22 minutes left and we don't have a single trade yet. Now we're getting the down close and we did not get an arrow. That's what I thought. You see how the black line got into the green right there? That was the mistake I made earlier today. If we go back and look at that thing that I did earlier today, we'll show you. This is what it looks like in real time. But when I messed it up this morning, this is what it looked like right here. See, the black got into the green on the down close, on that down close, and I took the trade anyway, and I shouldn't have. I should have waited just like I did right there. I should have waited for that to come down and give the close before I put the trade on. But I didn't. So I do learn from my mistakes. All right. On the ES, it's starting to move up. Both of the indices here are starting to move up a little bit. Nothing's worth trading yet. Okay, not yet. All right, I'm just waiting. We don't have a reason to trade anything yet. Even the NQ is starting to pull back. It's got the ribbon is separated here, giving us a little bit of trend. Long-term direction is giving us a little bit of trend. Getting a little bit of a pullback down here in the slingshot, but it's still not really a convincing move up. Okay. All right. This kind of chart is new. Explain it a bit, please. Okay, I'd be happy to. These are range charts. Now, I would say out of all the different types of charts that people look at, range charts are probably the ones that most people don't look at. I don't know why, but it's probably the one that people look at the least. In hindsight, you see these other kinds of Renko bars and Heikin-Ashi bars and all that, and they look great in hindsight. It looks like everything's perfect, right? But it doesn't actually show you where the tops and the bottoms of the bars are. It just shows you other stuff. With range bars, you actually see what the tops and the bottoms of every bar is. Every bar you look at, every bar you're seeing is the same size. These are all 7 ticks high. These are 7 ticks high. These are 7 ticks high. In the NQ, this is the NQ over here. Because the NQ is so volatile, I use a 16 tick range bar over here. Okay. Every bar is exactly the same height. And every bar has to close either at the top or at the bottom to get to the next bar. So you know ahead of time. Like if I were looking for a long trade, or what I was looking for over here on the gold a minute ago, let me use that as an example. What I was looking for over here on the gold, let me hit result drawings. What I was looking for over here on the gold a minute ago was the down close of this bar. Now I knew the high of the bar was. Even this bar right here, if this bar closes down, it's got a high of 20.1. So 7 ticks below that was where that bar is going to close at 19.4. I know that ahead of time. This bar can only be 7 ticks high. So if it's going to close down, it's going to close right here at 19.4. If I were looking for a shorting opportunity on a down close, I could put my order on ahead of time because I know that ahead of time. Okay, with any other type of bar, you don't know where that is. You don't know that ahead of time. If we were in here and we were looking at 30-minute bars or 5-minute bars, like over here, this is a 5-minute bar. The only thing I know about this bar is that it's got 1 minute and 23 seconds left in it. 22, 21, see the countdown right there? 18, 17. That's the only thing I know about this bar. I don't know if it's going to close at the top, the bottom, the middle. I have no idea. It could close way up here. It could close way down here. I have no idea. But I do know that it's going to close in 1 minute, in 2 seconds, in 1 second, 1 minute. That's what I do know. With a range bar, I have no idea when it's going to close, but I know exactly where it's going to close. Okay, that's why I use range bars. It's more important to know where it's going to close because you can react ahead of time. If you know where it's going to close and you know that if it does close there, it's going to satisfy the rules for a trade setup, then you can put your order on ahead of time and be proactive with your trading. That's why I use range bars. You can use whatever kind of bar you want, and our stuff works with any kind of bar. But with a range bar, you know ahead of time. And with a range bar, if you, let's look at this. In trading, there are 3 parts to every trade, right? There's the entry, the risk management, and the exit. Now, the entry and the risk management are defined ahead of time. You know exactly what those should be ahead of time. If you don't, then you shouldn't be trading real money. Okay? If you don't know why you're going to enter and you can't know ahead of time exactly what it takes for you to place a trade, then you shouldn't be placing a trade. And when you get into a trade, if you don't have a risk management strategy, well, then you shouldn't be getting into the trade to begin with. Okay? Because you don't know when to move your stop. You don't know where your stop should be. You don't know when to move your stop to break even or when to start locking in profits. You don't know anything like that. Right? These 2 things have to be solid before you start trading any real money. The exit part of it is more dynamic. Okay? The exit part changes. Once you get into the trade and you do this right and you do this right, then the exit part, you can have a beginning target for a trade. Okay? But that should change as the trade develops. It can change as the trade develops. An example is, well, let's say we did have a shorting opportunity over here. Let's say we were short right now on gold. Now my first target, if you look at these rules, my first target would be the prior swing high or low. It should be right down here. This is the minimum that the trade should do. All right, in satisfying what the markets always do, which is they go down and they go up and they go down and they go up and then they go down again and exceed the prior swing low. All right, to keep the trend moving. That's how they continue the trend. They keep exceeding the prior swing low, right? So in satisfying that, that's the first spot. The next spot that I would look for would be in the DOM. And if you take the trial with us and you become an active member, or you become even in the trial part of it, I'll show you how to read the DOM so that you can look for targets within the DOM too. And as price starts moving down there toward this level, the first level, you can see in the DOM whether you should have a target even closer or a target farther away. And then you keep moving your target out as price moves, and dynamically, you see more opportunity. At some point though, it's going to pull back and do it again. So you want to get the most out of this leg down and then get out of it on the pullback before the pullback, and then get it in again when it pulls, when it gets in there. An example of that happened today with crude oil right at the end of the room this morning. The trade that we took at the end of the room was right here. Okay, now this was actually a ribbon trade. We didn't get in on the arrow. We got in way back here on the ribbon because it pulled back, it hit the ribbon, and we had bullish separation in the slingshot. No, I'm sorry, I don't mean bullish separation. Bullish separation in the long-term trend. The black was in the green. So all you have to do is touch a ribbon to trade up off the ribbon. You don't need the arrow in that case. So we took the long trade from right here, and my initial target was up here, but it was showing a target right inside here when it started doing that. So it started moving up. I trailed my stop to break even. So remember the two parts of the trade. The entry, I did perfectly. The risk management, I did perfectly. The rules for that are right here. Okay. So I bumped my stop to break even, and then the target stuff. Trade exit. All right. I was looking left in here, looking left right here for a target. So I had that established. Then I was looking in the DOM, which is this one right here, for more targets, and they kept popping up. And so I moved my initial target, which was here, up to here, and then I moved it up to here, and then I moved it up to here, and eventually I got out like right up here. Okay, on that trade. So I went long from here, and I ended up getting out somewhere up here by trailing my stop and looking for targets as it kept going. Okay. So that's basically it. The indicators tell you when to enter. The rules tell you when to enter, what to look for, exactly where to enter. And the entries are precise. It's not like in this area. You don't enter in this area. You enter exactly right here. And it's not like it looks like it's going to go up more, and so I'm just going to enter when it comes down into this area. That blows this out and this out. So then there's no sense even trading if that's the way you trade. You're never going to make money long term. You might get lucky in the beginning. You might get lucky even a few times in a row, a few days in a row, but not years. Okay, one of the things that we have, this right here is a spreadsheet that we fill out at the end of every session. That's got our daily results going back over 10 years. 10 years of daily results. Go find that somewhere else. Anyway, sorry. I got sidetracked. But this is how we did in the morning session. I didn't count this one with the morning session results because it was after I had already filled out the spreadsheet. But I think we picked up, 14 ticks or something like that, even more, I think, on that one. But so we didn't end up with a trade over here. We didn't end up with a trade here. We didn't end up with a trade here. So, if you have questions now, that was a great question because there's no trades. So this could just be a training session for you guys. I'm sorry we don't have any trades going off right now, but I'm happy to look at other things. The futures aren't giving us anything right now, but I'm happy to look at equities or ETFs. Right? I imagine nothing's probably doing anything right now. Crypto, I imagine everything's probably pretty flat. And I had a feeling it was going to be like that this week when we looked at the news events yesterday. If you look in here, the news events for the rest of the week. Today, blah. Tomorrow, Canadian stuff, US stuff. This is in the pre-market, then nothing. Then, well, this is tomorrow, sorry. Really nothing tomorrow either. Okay, beige book in the afternoon. That could be something at 2 o'clock in the afternoon. Crude inventories is the only real thing that we're going to have tomorrow. Not really much going on Thursday with unemployment claims, and then Friday I think is our big day. Friday is our big day. Look at all these high impact things coming in all over. Okay, and these are weird time things right here at 9:45 a.m. and they come out a little bit ahead of time. So it'll be like 9:42, 9:43. So I kind of thought this whole week was going to be kind of slow. And it is definitely. Yeah, if you hadn't. Okay, well, candlestick patterns, you know, there's something to be said for candlestick patterns, art. But when using range bars, you know, you'll see things like gravestone dojis and dragonfly dojis and things like that much more frequently because the bar has to close at the top or the bottom. Okay. But so a lot of the candlestick patterns that you're gonna see, they don't really fall into play here with range bars, because you're not really gonna have a whole lot of engulfing bars because the bars are all the same size. Okay, things like that you're not going to see. So if you want to skip all of that stuff and fast forward to stuff that is truly based on price action, that is clearly defined based on price action. I mean, price has to actually move to create new bars with this. You know, like with minute bars and any other kind of bar, you get transactions and volume and stuff like that that move to the next bar. This bar won't move to the next bar until it exceeds the range. If it doesn't exceed the range, I mean, it could stay in this bar for hours. If you were to go to like, go look at, well, here, I'll show you.
Michael, there was a question in the members only discussion group on Telegram. Okay. My question was, what is the sensitivity setting for the 6E euro? Is it
okay.
0.01 or
oh, no,
0.35?
Oh, it's going to be here. I put all that stuff in here on the trade rules, but I didn't put the 6E in here.
Okay.
Okay. Now let me show you what you got to do to figure that out. Let's grab something that's not moving. We'll just use the M key. Well, no, we'll do it on a 7-range chart. So we'll do it with crude oil right here. Okay. And blow it up, and we'll make it a 6E. 6E. Okay. And we'll put it on the M contract. Now, because this has so many decimal points, the thing that puts the arrows in place is the sensitivity setting. The sensitivity setting is looking at the long-term trend. All right, it's looking back at the long-term trend. If you don't have any long-term trend, you're not going to have any trade setups. You're not going to have any arrows, I mean. Okay, so to check this kind of thing, to set the sensitivity, come in here and check the no trade zone. All right. With the no trade zone, you're not going to trade anywhere where it is pink, whatever color that is. You're not going to trade anywhere where it's that color. So you come down here and you set the sensitivity inside the TIQ context, go to inputs. At the sensitivity, it's a lot based on the number of decimal places that you have. See, like there's 1, 2, 3, 4, 5 decimal places. So let's just go out to 1, 2, 3, 4, 5 decimal places. And we'll throw a 5 on the end and see what that does. Look at that. So that changes it a little bit. Now, what you're going to be looking for is the flat areas where the long-term direction is flat. That's what you want. If you want it to be bigger, then make this number a little bit bigger. Okay, make this like 0.9. Now watch, these will get a little bit bigger. See, just a little bit bigger. So this is what you would do for the 6E, something like this. Or maybe go back here and make it 0.1. It's going to be a little bit bigger. Right? No, not noticeably bigger, but okay, do 0.2. There, noticeably bigger. Okay, so what you want it to do is cover the flat areas. You don't want to be trading when the long-term direction is flat. That is how you figure out that. So this is about what it would be doing. 0.0s, how many zeros do I have in there? 4. Yeah, 4 zeros, 0.00002 is what I have. That's about what it would be for the 6E. So you still get the long-term trend, you get your arrow when everything is showing what it should be. Okay, you get your arrow where you should be. Right, your highest probability trades are going to be the ones off the ribbon with the arrow. Those are your highest probability trades. Okay, It's as simple as that. You see right here, no trading. Over here, all these nice trades. Okay. All right, so it's all, I tried to make it as easy as possible for you guys to figure this stuff out and make it, I mean, this is your sensitivity setting. So I give you suggested sensitivity settings. If you look in here, this is mytradingiq.com. Again, if you haven't taken a free trial with us, go to mytradingiq.com, sign up for the free trial. But if you go here to mytradingiq.com and go to trade rules right here, these are the sensitivity settings in here. I should add the 6E on here. Probably that setting. I'm going to write that down. 6E.00002. I'll add that to this list. Because if you look at other things that have similar decimal places, like we'll say, go up here and click on the 6J. Let's see what that looks like. 6J, if you want to look at the yen. How many decimal places do we have here? 5. 1, 2, 3, 4, 5. How many does the yen have? 1, 2, 3, 4, 5, 6, 7. Okay, so for the yen, you would go in here and go down to your sensitivity and maybe add a couple of zeros in there and see what that does. There you go. There's the yen. And if, you know, again, what you want to have no trade zones in is flat spots like this. Okay, it's not going to give you any arrows, but look at all the arrows it did give. See how easy that is? And these arrows are real time. You can see them coming ahead of time. You know, you can, well, you get an idea of what's going to happen ahead of time. I mean, I'll teach you how to expect the arrow to happen. I mean, it's just a few steps you're looking for. You want your long-term trend to be up. You want this to be coming out of the oversold or overbought, and the black to be either in the green or the silver. That's the majority of what puts the arrow in place. If you have those three things, then you'll be getting an arrow. Right here, you will not be getting an arrow. Okay. Yes, the flat spots are, it's the chop where you want to stay out. You know, where the long-term direction is flat, where it may be changing or just consolidating, that's where you want to stay out. Like all this right here was just consolidation. You don't want to trade when it's consolidating. It didn't actually change direction right here. It just consolidated all through here and then it continued to move down. Right up here, it was all moving down. Trade, 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 trade. Consolidate, trade, 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 trade. Consolidate, trade, then direction change. Trade, 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 consolidate. And now where we are right now, it's a little bit more consolidation is what it is. Okay. Again, if you have not taken a free trial with us, you should go out to mytradingiq.com. It's right here. Go out to mytradingiq.com and sign up for the free trial. All right. If you like what you see in here, we do this 2 hours every day, and part of the trial and part of everything anyway is the one-on-one training. You know, we do one-on-one training with you guys, get you set up, get you started, and to make sure you're going in the right direction. Let me shut off the no trade zone and change this back to crude oil. Hang on. Was there any other thing anybody wanted to look at? That was a good question. I didn't see it in the members only thing. I wasn't looking at that, but we are on the M contract in crude, by the way, guys. We're on the the M contract in June. Okay, and I got to set the sensitivity on this back to 0.01. See, if I have it set to 0.002, it's not going to show any flat spots. But set it to 0.01, then it will. You see what I mean? Yeah, 0.01. That's right. So it's going to keep me out of all the junk, and that's what you want it to do. Okay. All right. Well, that was it, guys. We didn't get a single trade again. 2 days in a row, no trading. But we did have some good training. If you guys have not taken a free trial with us, go to mytradingiq.com, sign up for the free trial there. Okay. If you like what you see here, we do it every day. We've been doing this. Well, the spreadsheet Goes back, our daily results going back over 10 years. Over 10 years of daily results. All right. I am going to wrap it up now because we ran over our time a little bit without a single trade, but it was a good training session, I think. And with that, I will pass it back out to Fabulous Phoenix, Arizona. Again, anybody that's in there, I'm going to invite you to go out and sign up for the free trial, all right, if you haven't done it already. All right, Dwayne, pass it back out to Fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Stream is stopped. Okay.
Alrighty.
There
Well,
we go. Excellent.
Guys, another lesson in patience and self-discipline. If there is not a high probability, low risk trade setup as defined by the rules and the indicators, then you're just gambling. Okay? You're just taking a shot. So, I mean, it's difficult for us to sit 2 days, not take a trade, not have a trade setup appear, but you got to learn that's part of trading. We don't sit down to trade. We sit down to look for trading opportunities. And then as they present themselves, we take advantage of them in a nice way. Okay, recap of the morning session.
Today it took 2 minutes and 1 trade to get to $520.
Sweet. Good job.
Thanks.
All right, guys, I said we would finish the recap, and we will. Okay, here we are on the ES. We've already talked about that. Market ran up to the long target. Okay, pulled back to the BBC. The pullback held. Red and falling, turned to blue and climbing. So you had all this room to get your goal on the way to the target. And then what would you expect when price hits the zone? Resistance. See how price pulled back? And it made another attempt, couldn't close above it. It made another attempt, couldn't close above it. Finally closed above it. Then we ran into an issue. And if I had the time, I would scroll back and show you that exact issue. Okay. And price got below the VVC. Where'd it go? Like a heat-seeking missile, right to the zone. These are 30-minute candles. For an hour and a half, it tried to break that zone. Couldn't do it. So what did it do? It retraced to the BBC. Now, what did I say earlier? I said we have obstacles. We have to get below the step line and red and falling. And what did we fail to do? We did manage to get below the step line, but we failed to get below red and falling. So the trade opportunity that I laid out, it's still valid, but you got to wait for price. At this point, I would say 41.70 to 41.68. All right, moving on. Here's the Dow. Here's where the market opened last night. Pull back to the BVC. Gave a leg, enough to get your goal for the day. Another pull back to the BBC, and it held. And then we make a run. We hit the target. We trade through the target, and we hit the weekly trading zone. Remember, when price rallies up to a zone, we expect resistance. And when price drops to a zone, we expect support. 70% of the time, price will consolidate at a zone. 20% of the time, you'll get rejection. 10% of the time, the slice. When you get the slice, in other words, price sliced through the zone on your 30-minute chart like it's not even there. When it runs out of steam, it will typically retrace back to the zone it sliced through, just like it did here. This was a red candle. Came back to the zone, and then continued in the direction of the slice. Okay? Does that happen 100% of the time? No. I have evidence here. This time it didn't. But now we're back above the BBC. We've hit the long target. We've hit the short target. Now we're back above the BBC. See this bearish cross right here? That is our current obstacle. So we want to get above that, say 34,150, and trade that right up to 34,170. There's your goal for the day. And then if it continues to the target, that's another goal for the day. And if it continues to the zone, then that's probably about a week's worth of daily goals. Same thing over and over, again and again, day after day after day. On the Russell, market opened, consolidated for many hours, okay, at the zone. Remember, 70% of the time, 70% of the time, okay, we pull back to the BBC, pull back held, red and falling, turn to blue and climbing, and off we go, right up to the target. We overshot the target just a little bit, and we came back down. We got below the BBC, blue and climbing, turned to red and falling. Where'd we go? Right to the short target. This is kind of like paint by numbers, okay? Now, don't make the mistake that some people make. Why do I need to learn how to trade? This guy just gives me tons of trades every day. All I got to do is just take those trades. I don't need to learn how to trade. Well, that's not what you want. You want to become self-sufficient. You want to be able to look at a chart and let the chart tell you when to get in and when to get out. Self-sufficient. We're not teaching you how to trade a specific market. We're teaching you how to trade. And with our strategy and with our indicators, you can trade any market, anywhere, anytime that the markets are open. And as we discussed earlier in the session, futures are open around the clock. So if you fancy trading from a little sidewalk cafe in Paris, you can. In the Himalayas, I don't know if you get an internet connection. Maybe with the help of Elon Musk. Oh, speaking of Elon, if you missed the interview last night that Tucker did with Elon Musk about artificial intelligence, you should go find it on the internet. I'm sure it's there. Google it up. That was part 1. Tonight we get part 2. And there's some shocking revelations there. Elon's not only one of the wealthiest men on the planet, but I think probably one of the smartest. And this interview has nothing to do with politics. Some people might say, I don't like that Tucker Carlson. It's not a political thing. The interview, it's a 2-hour interview he did with Elon in a hotel room somewhere in California. They're just now finding out that you can check out, but you can never leave. That's for all the old hippies in the audience. Watch it. Watch part 1, watch part 2. AI is going to change the world. And could it get out of control? Well, I don't want to spoil anything. So you be sure and watch part 1. That's already on the net. Part 2. I'm sure you can find that on YouTube later tonight. All right, let's keep moving. We hit our long target. We hit our short target. We found support at the zone. On the NQ, here's where the market opened. Consolidated at the zone. The pullback held. Red and falling, turned to blue and climbing. This candle opened at 131.80. Ran up 150 points at $20 a point. That's $3,000 per contract traded. And then it continued. Where did it find resistance? At the zone. Now today's Wednesday. These zones were published Monday morning at 6:15 a.m. Eastern. We've published the zones for our members since December 14th of 2009. And this is exactly how price has behaved since the first day we ever published the zones for our members. This is why I tell you, when you become a lifetime member and you spend some time with the zones, again, they come out Monday morning, 6:15 a.m. Eastern, and once posted, they do not change for the entire week. They're going to make trading much simpler than you ever thought it could be. Trading's not easy, but it can be simple if you have the right mindset, patience, discipline, and the weekly zones. And as a lifetime member with no recurring fees, no upsells, and no nonsense, you'll have lifetime access to the weekly zones. So 1, 2, 3, 4.5 hours. Price has been trying to break the support level that it couldn't break overnight. What's the most likely scenario from here? Price rallies up to the BBC, finds resistance, and gives us a leg to the downside, probably back to the zone. Should price drop below this zone, you see this bullish cross right here? See, price was falling real pretty, then it stopped right there. Look left. A bullish cross that leads to an extended move. First time price revisits that area, it will almost always be good support. Same is true of a bearish cross in the opposite direction. First time back up will most likely be resistance. We were seeing it happen right before our eyes. The NQ's reaching up for that BBC. Price always reverts to the mean. In our case, the mean just happens to be green, and we call it BBC. Stands for bull bear cross. Price crosses below it, we anticipate lower prices. Price crosses above it, we anticipate higher prices. Once the step line crosses blue and climbing, we anticipate a retracement. Same thing over and over, again and again, every market. Okay, we're in June crude now. We rolled Sunday night. Here's where the market opened last night. Spent a lot of time consolidating at the zone. Remember, 70% of the time. Look up here. Okay. Really is 70% of the time. This is what rejection looks like. I've already shown you what the slice looks like. So we're above the BBC. We've got a bullish cross. Okay. Now price is going to attempt the zone and ultimately the long target. But let's face it, from where we sit right now at 81.60 up to 81.90, that's $300 per contract traded. If you've earned the right to trade 5 contracts, that's $1,500. 10 contracts, $3,000. 20 contracts, $6,000. But when you become a member at CFRN, you don't start trading real money right away because you haven't learned the strategy yet. You don't know how to read the chart and the indicators. You're going to get a 24/20 blueprint that's going to walk you through writing your business plan and your trading plan. It's also going to require that you put together 10 consecutive days in a row in your demo account in the simulator where you reach your goal in 10 trades or less. Once you accomplish that, you'll get the green light to go live with 1 contract. Now that you're trading real money, your goal is to increase your account balance by $2,000. Once you accomplish that, the blueprint will give you the green light to add a 2nd contract. Big difference between your 1st and 2nd contract. First contract is funded with your startup capital. 2nd contract is funded with profit you earned in the market. Blueprint's going to tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. By then, you've got the hang of it. But you only add one at a time, and you only add with profit you earned in the market. If you have the self-discipline to follow that formula that's been in existence for a long time for our members, reaching all the way back to 2008. Okay, it's time tested, but you have to have the self-discipline to follow it. Without patience and self-discipline, you'll never succeed as a consistently profitable trader. And that's just the truth. So again, a move here from 81.60 to the zone at 81.90. It's 30 ticks, $10 a tick, $300 per contract traded. Gold. Here's where gold opened. Got above the VBC, gave us a little leg, enough to get your goal for the day. Because remember, when price is above the VBC, it's trying to get to the zone and the target overhead. Price is always trying to get to a zone. Look here yesterday. Once blue and climbing, turned to red and falling, and price got below the VBC. Like a heat-seeking missile, right to the zone. Now that's 2016 down to 1998. That's $2,000 per contract traded. I hope that got your attention. Okay, so we had a pullback. This was a wild card here. It happened at 9 o'clock. Here's a 9:30 open. The 10 a.m. candle took us right up to the long target. We banged up against it a couple times. We've now pulled back to the BBC. Question is, will the pullback hold? Well, we know it holds more often than it doesn't. But we don't just recklessly park an order here to buy the touch at the BBC. We wait to see if it holds. And if it holds and starts printing a green 30-minute candle, then we're going to drop to our smaller time frame that you see every day in the live training room. And that's where we're going to actually execute the trade. Because using the smaller time frame to execute allows us to minimize our risk. 30-minute chart allows you to maximize your profit potential. Smaller time frame allows you to minimize your risk. Again, if you're a new trader, the question you should be asking is not how much can I make, but how much can I not lose as I learn this valuable life skill. Once you learn how to trade, not get lucky a couple days, but actually learn how to trade, that is such a valuable life skill that no one can ever take away from you. Like I said, go to Paris, go to Dubai, any place that has a strong, fast, robust internet connection. That's all you need. And now that we've rolled things out on the TradingView platform, all you need is a little laptop folded up under your arm, because there's no software to download and install. It's all browser-based. It's one of the reasons TradingView is one of the most sought-after trading platforms out there. And you can open an account for free. And if you take our trial, you'll have access to a discount coupon that will make your subscription a little more affordable. Okay? So, we're just sitting, nothing's happening here, so let's move on. Silver. Silver opened at the zone, consolidated for hours, gave us a leg. A 2-penny move is worth $100. A $1 move is worth $5 grand. Now, the high of this move up came just shy of this bearish cross. Okay? It's an area. It's not an exact price to the decimal point. It's the area where the bearish cross took place. Okay? Sometimes it'll go a little higher, sometimes it'll be spot on where it crossed, sometimes a little lower. That's the first time up. Now that we've pulled back to the BBC, we need to get above the step line, above blue and climbing, and we got a window of opportunity up to this high, and a window of opportunity up to this high, and then we fully do hit right where the bearish cross took place, potential resistance, in the zone, then the target. But based on what I'm seeing right now, the metals look like they're taking a long siesta. Okay. All right. What do we got left? The euro. Here's where we came out of the gate last night. Consolidated at the BBC. We got above the BBC. We pulled back to the BBC and the pullback held. And a leg and a retracement and the pullback held. And that took us right up to the zone. We managed to trade through the zone. And we hit the target. Spiked it just a bit. And the step line crosses blue and climbing. And what does that tell us to expect? A pullback to the BBC. We overshot it a little bit. Then we had to deal with red and falling. So we had another pullback to the zone. Now red and falling's turned to blue and climbing, so we anticipate higher prices. So you want to be above this swing high, up to that swing high. And then if price can get above the long target and these highs, then you've got a window of opportunity all the way up to here, and then the zone. On the daily chart, I keep saying I'm going to take this down. If we close bullish today, in other words, if we close at the high of the session, I'll probably take this down. If we don't close at the high of the session, well, then the question still remains. We've had a leg and a retracement, a leg, a retracement, a leg and a retracement, and we're just hanging here. I mean, I can feel the tension in the air. This thing is getting ready to bust a move in one direction or the other. Now, based upon how the indicators are stacked, the bust a move looks to be to the upside. But then my mind starts thinking about all the things that are happening in the economy. Just so many issues in the world today. So my mind tells me that the market's going to go down. But what my mind tells me means diddly squat, to coin a term. It's what the chart tells me at any given moment. That's how I base my trade. And my alerts, okay? Again, in the Logic 247 alert channel, which members and trial members have access to, there's over 13,800 individual handcrafted alerts, every one of them a trend trade based on the 30-minute chart and where price is relative to the BBC. There's nothing wrong with counter trend trading. It's not illegal, immoral, or fattening. But a counter trend trade does not have the same high probability, low risk characteristics of a trend trade. And because we're trying to help you learn how to trade, then I want to make sure that the alerts I put in front of you have the highest probability of reaching at least their initial target. So out of all those trades in the alert channel, and as a trial member and a member, of course, you can scroll back and see what the alerts were a year ago today, 2 years ago today. It's all there. Once the day is completed and once the week is completed, all of that information falls into the public domain. We're transparent in everything we do. No secrets. We don't hold back. And we have nothing to sell you except the passport, which is your all-access pass to everything we do, everything we've ever done, and whatever we do in the future. And there are no recurring fees. There are no upsells. There's no nonsense. You become a lifetime member. You become a part of the family. We have a very, very vibrant community and family. And when you're on the trial, you'll have the opportunity to mix and mingle with our traders who've learned the same strategy you're trying to learn, who are using the same indicators that you're using, learning to use. And they're always happy to help the new guy or the new lady that comes on board. Because the good book tells us, to whom much is given, much is required. Does everybody comply with that? No. But do we have a lot of people who do? Yes. You also will have access not only to the live training room every day, but the live teacher and live markets. You'll have access to unlimited one-on-one private mentoring, strategy and indicators, the strategy and methodology that you learn and the indicators you own for life are fluid across all markets and all time frames. Futures, stocks, crypto, forex, doesn't matter. 1 minute chart, monthly chart. Every tick and range chart in between, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you'll receive the Logic 247 alerts around the clock as they're published. You'll receive the Concierge Trade Alert Report every evening when it's published. You'll have access to the members-only workshop on Thursday night. And you'll enjoy around-the-clock support via our multiple Telegram channels. All that and so much more. Everything a trader needs, all under one roof, one low price. To get your passport today, go to eminifuturestrading.com. Couple mouse clicks, you're in like Flynn. If you have any questions, call Valerie at 949-42-EMINI or send an email to support@cfrn.net. Okay, our good word for the day and the next couple of days. You must care for the needy. In Acts 6:1, it says, their widows were being overlooked in the daily distribution of food. Now, this is something near and dear to my heart because my wife, she has a food ministry where she provides food at no cost to low-income families people who are just, going through a rough patch. And she's developed a network of providers because this company or person over here may have an overabundance of something they don't need. So they get in touch with her. Or one of the people in her network will have someone get in touch with them. And man, there's cars just scooting out all over the city, loaded down with food. That's one of the things that's always perplexed me. Thousands of people die on planet Earth every day from starvation. Yet the average American household throws out 20 pounds or more good food every week. And when you get to the restaurants and the supermarkets, it's tons of edible food that gets thrown away. So she took on that ministry, and I'm really proud of her and the network she's developed. So back to Acts 6:1. Since the government didn't care for widows and orphans back in New Testament times, the church took on that responsibility. Unfortunately, bias raised its ugly head, and Jewish widows and orphans were given preferential treatment over Gentile widows and orphans. How did the church leaders respond to this? Well, they could have easily dismissed it like we so often do. They could have said, "We're called to feed souls, not stomachs. We deal in matters of sin and salvation, not sandals and soup." Instead, here is what they did do. First, they called a meeting to resolve the problem. This is Acts 6:2. They let every member know that their church took poverty seriously, and they were each personally responsible before God to do something about it. The scripture doesn't endorse forced communism, but it teaches clearly spirit-led volunteerism. Second, they assigned the problem to their brightest and best. They selected 7 men, well respected, full of the Holy Spirit and wisdom, and gave them this responsibility. That's Acts 6:3. Instead of grooming our children for important fields like medicine, law, politics, or government, let's first teach them that caring for the needy is one of God's highest callings. Why do 10% of the world's population go to bed hungry every night? Why do 17,000 plus children die every single day? That's 1 every 5 seconds from malnutrition and preventable diseases when we can do something about it. And no one person can do everything, but God has called each of us to do something. James 1:27. Pure and undefiled religion before God the Father is this: to look after orphans and widows in their distress, and to keep oneself unstained from the world. That was our scripture when we built New Hope Orphanage and School in Kampala, Uganda, and then launched our NGO, LoveWorks International. It's based on that scripture right there, James 1:27. Thanks so much for tuning in. whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.